What in the world is quantum computing?
45 years of research has gone into quantum now. At least 15 years went into AI before ChatGPT kind of magically appeared.
Tech is the name of the game.
Things will absolutely change,
Right.
and you got to be prepared for that in your portfolio.
This is not investment advice. Your CV looks like the application wish list for a finance graduate. Hello. Welcome to a new episode of Connects by Thndr. My name is Hisham Jazzar. I'm the GM of Thndr GCC. Today, we're talking to Geir Espeskog, who is the co-founder and CEO of Boreas. Gier has more than 25 years experience in financial services. He started his career out in Goldman Sachs in London in 2001. He's worked at Merrill Lynch. You've worked at Barclays. You've worked at BlackRock. Your CV looks like the application wish list for a finance graduate. Can you tell us a bit about your journey?
Absolutely. So I'm Norwegian, and I studied engineering. I was smitten by the investment bug at the end of the dot-com bubble. So I I applied and was lucky enough to start my career at Goldman in London doing equity derivatives. And I continued that for 10 years at Goldman, Merrill Lynch, and then a few years at Barclays. And then I joined BlackRock just as they had bought the ETF business from BGI. And that was a really exciting time in markets because we just came out of the financial crisis. Barclays actually sold BGI to BlackRock. And I joined at this very special time for ETFs in Europe and was lucky enough to help build the ETF business first in the Nordics, and then I moved to Hong Kong to lead the distribution business for iShares ETFs in Asia Pacific. So it was a phenomenal journey. I was about 13 years at BlackRock, most of that time in ETFs, and I'm passionate about it because it's a really cool financial innovation that democratizes markets and makes investment easy, fun, convenient, and helps people build financial portfolios for the future.
What in the world is quantum computing?
What is quantum computing? It's normal computers have chips, right? And the chips, they're in your iPhone, right?
Mm-hmm.
And they can calculate things by toggling between 0 and 1.
Mm-hmm.
Quantum computers, and I'm simplifying, can be 0 and 1 at the same time. So they can be 30% 0 and 70% 1. So that's called superposition. Now, together with two others, let's call it magic powers of physics inside quantum computers can therefore do calculations simultaneously rather than one at a time. You're basically using the smallest particles in the universe in a quantum computer, like atoms or electrons, and you're manipulating them. So imagine you're flipping a coin up in the air, and you're flipping another coin at the same time. If one coin lands at 0, this is in the computer, the other one is always 1. And if one is 1, the other one is always 0. Now, if you have superposition, so you flip a coin, superposition kind of means that it's 0 and 1 at the same time as it spins in the air. It's just conceptual.
Got it.
If you use the coin analogy, as it spins, you know where it's going to land before it lands.
Okay.
So that's the magic power. So those three together mean that you can solve problems that regular computers never can.
Got it.
And you can do it instantly. Imagine some tasks that would take classical supercomputers that we have today millions of years, maybe even billions of years. Maybe never they could solve these problems. Quantum computers can do that potentially in minutes. And that's just the start. Think about things like solving Alzheimer's, Parkinson's disease. I think that's amazing.
So what you're describing really is kind of an evolution in the processing layer that we're using. We used to use chips, and we were using silicon on chips, and we're using copper and zeros and ones. And now you're talking about a completely sci-fi sounding future, which is very exciting. And I think what I would love to know is who is using this, right? Because we've been hearing about quantum forever, right? This has been 40 years plus of research and fascination by physicists, and now it's kind of evolved into capital markets and kind of enthusiasts. And so I'm very curious to know who is using
Who are the
these
clients?
computers.
Yeah. So the clients are growing, but this is still a research area, right? So let's be clear. There's a lot of uncertainty tied to this, we call it sort of get ready for the ChatGPT moment of quantum, right? Okay. Just like 45 years of research has gone into quantum now, and similarly, at least 15 years went into AI before ChatGPT kind of magically appeared with the solution, right? One of the real milestones that you should watch for is, to your point, it's a good question, who's using it, right? So right now you're seeing, I can give you some examples. Boeing, the big airplane manufacturer, they're working with, I believe it's IBM, one of the leaders in quantum. They're in the index that we've helped design. They're working on metals that don't corrode as easily, right? So billions of potential cost savings.
So material science,
right? Maybe it doesn't sound that exciting, but it's exciting if you build planes and, like if you don't use your plane, you need to store it in the desert so it doesn't corrode, right? Imagine if you didn't have to do that. So that's one application. Financial firms use it. Like JP Morgan's probably one of the most advanced from what I can understand. They're using it to build derivatives pricing models. Because as derivatives and physics kind of, the math can get a bit wacky sometimes. And that's exactly where quantum computers come into place, where you have these sort of quantum behaviors. Roche, another company, are using it to develop drugs. And they're trying to, exactly like I described before, they're trying to reduce drug development time by maybe 20 to 30%, at least initially. All these are sort of beta projects, right? They're like experimental, where they're working with the quantum industry to find application, but they're willing to pay for it.
If we were to think of it in terms of an adoption or development cycle, would we still be in the R&D phase? Would be in the pilot phase, late R&D phase?
It's Sundar Pichai, the CEO of Google, said that he thinks we're in 2010, where AI was in 2010. And Satya Nadella, they came out with, at Microsoft, the CEO of Microsoft, he said that when they came out with this Majorana quantum chip, earlier this year in 2025. But he said he thinks we're sort of only 2 to 3 years away from a workable quantum computer, right? So that's sort of where we are. I think 2010 sounds like we're far away. It's probably more, in the next 3 to 5 years, you're going to start to see more and more applications. It may not be the big bang sort of one announcement and there we are. I think it's much more a timeline. And as long as companies, for instance, IBM has a very, very clear timeline set out that they want to get to fault-tolerant quantum computing by 2029, and that's only 4 years away. And so if you can monitor that they're on track for that, that's pretty exciting. And that's, as an investor, you may want to look at that and say, okay, how do I benefit from that potential growth that's coming?
Got it. No, it's exciting stuff. And maybe let's talk about the landscape a little, right? I feel like this is a good time to introduce who are these contenders. This is a very exciting race. We've got a bunch of companies with horses in this race.
Yes.
Who's doing what, where, and who's funding them?
Think about beta. I'm an old dude. Like back in the 80s, nobody knew who was going to win, Betamax or VHS, right? And so now you have all these standards within quantum computing. Maybe you'll see some of them evolve together and be successful because they have different applications, or maybe some of them will fade away because the other ones are just so successful. So you want to bet on many horses in this game, I would say, unless you're confident that there will be one winning technology, right? There's a race between the US and China is involved, and China is really, really strong in this field, and there's a lot of research going on in Europe. But the American side is probably the furthest when it comes to commercialization.
Yeah, and when you tell me corporates are investing, the obvious reason why is they think there's money here, right? But when you hear governments are investing, it starts bringing in the topic of national security, right? If the US is allocating billions of dollars to this technology, it kind of reminds me of DARPA days when the US and still continues to fund a lot of deep tech that eventually comes out of the pipeline and produces and gives the US their reign, basically, or their position as a leader in global technology. So it's interesting to see that this is playing out and that quantum is actually part of this arsenal of technology, right? That's what you're saying?
That's exactly what's happening. And R&D spending did drop after the sort of Cold War ended and the race for dominance and security and technology in the Cold War, and we're now back in that type of environment. The big difference is that now you have these what people call the hyperscalers that have enough cash flow and money to actually, in many cases, outspend governments, and that's the first. But if you think back to history, like the transistor, the invention of the transistor was very much a sort of government initiative, and that gave you transistors that you put on microchips, right? And that's, that research and development back then, I think nobody really knew that was going to give you 3 generations of economic growth, innovation, wealth creation.
Yeah.
And it's everything around us is microchips. And that was that little transistor back then, right? And now we're in this sort of AI and quantum similar race. And I think it's very hard to imagine today what the world will look like 10 years from now. But I think what we're talking about today is going to be a major part of that progress. And that's exciting. You asked me a question about companies. So if you look at, we believe in designing a sort of concentrated basket of companies and not diluting it too much, so pure exposure to the theme. And so the index we're talking about has 25 companies, and about 40% or maybe 42% of the top companies in the index, in terms of weight, are things like Quantum Computing Incorporated, D-Wave, Rigetti, IonQ. These are all like pure play specialists, mostly chip companies and algorithms and software. Now,
so when you say pure plays, what do you mean by that?
Well, there's sort of like there's startups, but like D-Wave, I think, was started in 1999, so it's kind of an old startup, but still working on this research. And I believe IonQ is around 10 years old. Quantum computing is about 8-9 years old. Don't quote me on these numbers.
Right.
So you have a number of these companies that are, racing to develop the chips, and there's a number of different sort of quantum technologies. So you have these sort of pure plays, and they're all like specializing in different, typically slightly different technologies within quantum computing. And then you supplement that, and those are typically not in your portfolio already. So that's what you kind of want, right?
Got it. Well, they're not big tech.
They're not big tech,
right?
They're not there. They're not in your S&P 500 typically, at least not now. So that means when you look at your portfolio, do I own them already? Probably not, unless you just actively gone to buy it as a supplement. And then you add hyperscalers, because they have the firepower in terms of free cash flow to spend on R&D, right? And they give you a bit of a buffer in the portfolio, right? So that yes, this is a risky area, but you have a combination of the pure plays, and there's a big weight, 42%. You have the hyperscalers, and then there's a whole range of companies also that supply them with the components that they need to make this.
If I'm an investor and I'm not quite sure which company is going to win, which quantum computing standard, if you will, is going to win, you're saying that there are some of these supplies that many different quantum computing companies are using that you could invest in.
That's exactly what I'm saying. So you have, within quantum computing, you have sort of, let's call it 3 main sectors. There's hardware and components. That's basically making the chips. So what you're betting on there is sort of who's going to be the NVIDIA of tomorrow or the NVIDIA of quantum computing. Then you have algorithms and software, because these are completely new computers, new chips. So you can't use the old programs. So you need new algorithms and software. And so there's money in that. So that's a separate sector. And then you have the last category, it's called communication and sensing. So that's all about building ultra secure communication system, and you know, you cannot listen in. And it's also about building navigation systems that don't need GPS, for instance. And it's also about encryption for like ultra secure systems that cannot be hacked.
Got it. So we've got navigation, we've got software, and we've got hardware.
Yeah, and communication, navigation and communications.
Okay.
Yeah.
And let's talk a bit about the landscape here. I know that there's IBM, there's a bunch of these players that you mentioned. Who's the big name in each of these categories? And obviously, this is not investment advice. All the legal disclaimers have been.
No, I mentioned the pure plays, right? So you want to talk about who the others are,
right?
So there was, let's start with the big announcement last year was probably Google when they came out with a new chip called Willow, and Willow sort of proved what we can call quantum supremacy. That means it's a chip that can do a specific kind of mathy problem faster than the classical computer. Everybody got excited about that. And why do they get excited about it? At least everybody that follows quantum
got excited.
Quantum, so that is the geek in me. But you got excited about it because they made a chip that could put, I think it was 105 qubits together. But normally when you put more qubits together, the error rate goes up. I think I talked about that. What they did was put more qubits together and get error rates lower at the same time. So that was a big deal. Google's definitely in this game. IBM, which surprises many, maybe, but they're one of the pioneers in this space, and they're really, really ahead, both on chips and on offering those chips through cloud, right? So they already have like live partnerships with, I think I mentioned, I believe Boeing is one example where they're working together, and you can access their quantum computer through their cloud, right?
Got it. So if I'm a big company and I have an interest in quantum, I don't have to get my own quantum computer. You're saying that there's an existing distribution channel. We're kind of piggybacking off of the cloud services industry, and AWS has already slotted these computers.
The good news for a user, like let's say you're a medical research company, right? And you say, wow, these computations are just amazing. Like, I want to buy that. Well, the thing is, you just if you already have like a cloud service, you can just pay extra for it, and you get access to it right. there and then.
Right. It's beautiful. It lowers the bar, and experimentation is everything in innovation.
But think about it. So you run a big computer companies like Microsoft, Google, Amazon, run big data centers. In those data centers, they have chips, right? Lots of them. They have the CPUs for certain calculations. Those are the classical chips. And then they have these gaming chips that NVIDIA became so successful at selling for AI purposes, GPUs, right? Next to those, you're going to have QPUs, quantum processing units, when they're ready. And as a user, you will just send your problems, your calculations, your queries to the data center, and they'll direct to whatever chips need to solve what. So as a user, it just, you just get faster computing, and that's the end of the story. And that's the beauty of this.
Right. And like I remember I read into this because you'd mentioned it when we spoke a couple of days ago. And what I found is they're solving a kind of unreal problems, right? They're kind of like mathematical problems, but let's call them like non-practical problems. But they've proven that they can do it better than a classical computer.
Correct.
Would the next step be, okay, let's try and apply this to a real world?
That's exactly it, Hisham. That's exactly it. So that's why I call that quantum supremacy. So Google did that. The next step is they call it quantum advantage. So that then you're generalizing and you say, let's find a problem that is also useful and solve that faster than a classical computer. And there's a company, one of the startups, D-Wave, announced earlier, I think it was at the NVIDIA Quantum Computing Day, I believe in March this year, and they said that they'd solved a specific magnetic calculation problem for magnets or materials faster than the classical computer could do. So they said,
so we're getting there.
We're getting there. But let me just quickly give you some of the other companies, right? Google's definitely in this game. IBM, which surprises many, maybe, but they're one of the pioneers in this space, and they're really, really ahead, both on chips and on offering those chips through cloud, right? So they already have like live partnerships with, I think I mentioned, I believe Boeing is one example where they're working together and you can access their quantum computer through their cloud, right?
Got it. So if I'm a big company and I have an interest in quantum, I don't have to get my own quantum computer. You're saying that there's an existing distribution channel. We're kind of piggybacking off of the cloud services industry, and AWS has already slotted these computers.
The good news about all this like physics stuff, right, that I love, but most people don't want to know how the engine in their car works, right? They just want the car to drive fast and, work when they need it. And the good news about it is this will be offered through multiple cloud services. So Microsoft Azure, Google, and IBM will have their own, et cetera, et cetera. Amazon is a big one that offers, many of the startups I mentioned are offered through the Amazon and multiple channels. The good news for a user, like let's say you're a medical research company, right? And you say, wow, these computations are just amazing. Like I want to buy that. Well, the thing is you just if you already have like a cloud service, you can just pay extra for it and you get access to it right. there and then.
Right. It's beautiful. It lowers the bar, and experimentation is everything in innovation.
But think about it. So you run a big computer companies like Microsoft, Google, Amazon, run big data centers. In those data centers, they have chips, right? Lots of them. They have the CPUs for certain calculations. Those are the classical chips. And then they have these gaming chips that NVIDIA became so successful at selling for AI purposes, GPUs, right? Next to those, you're going to have QPUs, quantum processing units, when they're ready. And as a user, you will just send your problems, your calculations, your queries to the data center, and they'll direct to whatever chips need to solve what. So as a user, it just, you just get faster computing, and that's the end of the story. And that's the beauty of this.
Got it. So that basically highlights cloud service providers as an interesting category within this team, right? If you're not sure which kind of chemistry or physics is going to win out, then you could take a bet on a cloud services provider, for example. You mentioned IBM and Amazon, who's probably going to own the relationship with the customer, which we're finding nowadays is more and more important. So I kind of want to reframe this conversation. We've been talking about quantum a lot.
Yes.
But a lot of our viewers are probably not invested in quantum. They're probably invested in other companies, right? And tech is the name of the game these days. A lot of people are interested in tech. You're someone who worked in financial services for a very long time. You've seen multiple waves of technology, right? You joined as the dot-com bubble was bursting. You saw the rise of mobile and how it entered the public markets. You saw kind of cloud computing, crypto, now AI. Can you help our viewers kind of contextualize, or can you help them think about how does tech, or how should tech fit into their portfolio? And also, I feel like sometimes when I talk to people in asset management, their definition of tech seems to be kind of frozen in time, right?
Okay.
It was frozen decades ago when kind of the dot-com bubble was coming about, and all these businesses were nascent businesses, right? You fast forward to today, and there are a lot of tech businesses that really have matured and they've graduated, right? So obviously they still are technology companies, right? But for example, if you look at Spotify, it's a media company.
I see what you mean.
Right? It's a consumer media company. So how are people going to be consuming media in the future? It doesn't feel as risky as betting on a startup that's going into the media space. It's kind of a company that is using technology, but it's a media company, right? If you look at Airbnb, to tourism and real estate company. Obviously, the tech is a crucial part of the platform, but at some point, these big tech companies eventually become kind of staples, right?
Yes.
And so, in my view, right, I'm a bit biased. In my view, that clears up some allocation that an investor could allocate to riskier businesses, right?
I love that, I think. And I think it's spot on. And it shows a couple of things, right? Like, I remember when Google went public and there was, some people were convinced it was great, but some people would tell you that search engines are never going to be a thing. It doesn't make money. This is never going to work. Advertisements online, never going to be a big deal, right? So that comes back to me like, okay, well, maybe you put some money in anyway, because what if you're wrong? So I think that's there's tons of examples like Nokia in '99. It looked like they were invincible on mobile phones, right? And we all know what happened. And the same with
and physically invincible also. Nokia phones.
You mean like the size?
They just wouldn't break, right? They would just break.
Quite solid.
Yeah.
That's true, actually. And of course now the rest is history. But again, the world changes much quicker than you think, and it's very hard to see the future. I think what you really know is that things will absolutely change, right? And you got to be prepared for that in your portfolio.
Right. I mean, it makes me think of kind of back when you were in BlackRock and you had clients, right? You managed many clients, and I'm sure many of them have come to you asking you to expose them to one of these technologies, right? They heard something from their cousin or on the news and they're excited about it and they come to you, and obviously these are kind of bigger players, but they want exposure to this. And I'm curious, how would you go about doing that, even if it's not quantum, right? What would you look at?
So you got to look at, like, if technology specific.
Right, technology specific. Some new emerging technology that is cool, the current fad, the current hype, and you have a client who's super excited about it and they want to invest, and maybe all they know is this one company, and they want to go all in this one company, and you're like, oh, wait, well, give me a second here. Let me give you a better strategy.
Look, I mean, I think for like quantum aside, quantum is volatile because it's a new technology, right? And the thing about uncertainty, the great thing about uncertainty is that hopefully it gets rewarded if you're right. So that means that the upside is there. Look, don't put all your eggs in one basket, right? And that's to your friend who has one technology company that he loves. Yeah, buy some of that, but also maybe diversify and add in something like an ETF, with a broader exposure. So if you're buying, why are you buying that company? Why do you like it? Do you like it because it's we're talking quantum. Is it a quantum company? Okay. Okay, great. You love it. But did you know that there are like 25 other ones or 24 other ones that are competing with it, and we don't know which one's going to win? So
Right, and they might actually win. Yeah.
why don't you buy some of them as well? So that's where the ETF comes in. And then you have to look at your portfolio and go like, is this your sort of long-term savings nest for when you're older like me? Then, build a core portfolio as well. Something that's kind of low cost and less, more established. So MSCI World, S&P 500, NASDAQ.
That sounds like what I should do. And I want to use this as a segue to actually ask you a question of, like, what's the difference between you handing a portfolio to someone, you saying, hey, here's my list, right? Like, here's the quantum companies that my ETF is investing in. Go buy them on your own. Go do that 20, 25, 26 transactions. Go buy them on your own. And there you go. You have your exposure, and you don't actually need to use my ETF. What's the difference? Okay. What's the difference between that and the service that you provide through an ETF?
Okay, so Lunette obviously launches the ETF on RES Index that we've worked on. But look, I mean, let me just revert back. It's the convenience, right? So you're sort of outsourcing stuff, and think about it. You outsource a lot of stuff. You don't make your own car typically. A lot of times you eat at restaurants, and you could make what they make, maybe. Probably not a car, but you can make, an omelet in a restaurant or a burger, but you just choose to let them put the ingredients together for you and do it, and you pay them for that. The beauty of an index like the one we've designed is that it's every 6 months they rebalance it. So now you get a new, fresh perspective of what's out there. Are there any new players that should be included, or there's some old players that need to go out, and then you rebalance it. So somebody does that for you. So somebody does all the trading. 25 stocks is quite concentrated. Some portfolios will have a lot more securities. If you're going to sit there and buy them all yourself, you need good technology, you need time, you need the interest, you need the skill. I think that's what you get in an ETF for, typically a very reasonable amount of money. If you think some of these markets, I think, I looked at quantum stocks yesterday, and at one point there, some of them were up like 10%, and then they went down, they closed up 3% on the index, I think. And if you think, for an ETF where you pay, less than 0.5% a year to hold it, that's less than a typical day's movement of the market. So it's obviously not that expensive.
Right. So you're saying one part is convenience.
Yeah.
And the other part is kind of institutional services like rebalancing. What is rebalancing?
Rebalancing is just that, because you have a cookbook recipe, right? And it says how much of each stock, and we talked about artists and the natural language processing system. So that helps us rank the securities. Then we weight them accordingly, and then we buy them, or Lynette will buy them, and then it stays like that. So over time, one stock will go up, one will go down. So they'll move. So those weights will change. So rebalancing is basically just an opportunity to, one, look at the new recipe, and then compare that to what do we have now in the portfolio. And then, we just go like, okay, we have too much of stock A, too much IonQ or too little. Let's buy or sell some of that. We have too much or too little of IBM, Honeywell, Rigetti, blah, blah, blah. So,
and is too much or too little based on kind of their percentage of the portfolio, or is it based on kind of news of how they're
based
performing?
So that depends on how the index is constructed. Got it. This is that active design. So once it's designed, and we let it run, right? But the design in this case uses artists to rank stocks based on their quantum relevance, right? So we try to, stock number 1 is supposed to be the most relevant relative to the other ones to include in an index. And then you have stock number 2 and 3 and 4.
Can we actually get into that? Because you mentioned something about kind of revenue, right? Like, if in order for a stock to qualify, within this list, it has to have a certain amount of revenue coming from its quantum business. Is that right? Can you explain this a bit so people understand what exactly is making it to this list?
Well, it's a good question, and you know, there's an element of proprietariness to the model, but what it seeks to do is where you don't have a lot of revenue, which is the case here. There is some revenue. And it looks like it's going to increase. I think I said it's projected to increase maybe 40%, nearly 40% per annum the next 7 years. But you don't have a lot of revenue. So what you're trying to define is like, for a company like IonQ, how important is quantum to their projected revenues? Like, how important is that to Microsoft? How important is that to Google? Based on what are they writing about it in their public documents? What are they saying about it publicly? And so you're using AI basically to try to determine, based on what they're saying, how important is it, and how important will it likely be in the future?
And so you're reading off their disclosures.
We're not reading this. The artist is reading of their disclosures, public information, news material, so available public information. There are different ways of weighing it. We think this is a pretty robust methodology to get to that sort of pure play. These are the companies that make the hardware or chips. These are the ones that make algorithms and software. And these are the ones that make the communication sensing software, and these are the companies that support them in that. So we're quite excited about the portfolio, and it's only 25 shares, right? So we believe that you're really getting exposure to quantum with this, and not so much else. And that's something as an investor you need to be aware of when you buy thematics. Like, you probably just want the theme, right, and not dilute it too much with too many other stocks.
Right. Well, I'm bought in, personally. Okay. I'm bought in. And I'll tell you, like, when I started looking into this, I started reading up on quantum stocks, and I went through the list, and I was like, all right, I'm going to go in and pick the ones. I have a propensity of like going in rabbit holes.
Okay.
And kind of, if I were to describe my career as an investor, I would do so as a series of obsessions. And so a couple of days in, I realized that this is not something that I can do right now. It's going to take way too much time.
How far did you get? Did you get to trapped ions?
No, I did not. Thankfully. But at some moment, I just closed my laptop, opened my Thndr app, and bought quantum.
Okay.
Yeah.
Thank you. Well, look, I mean, the convenience is
easy.
Is a good thing with ETFs.
Right. Yeah. Well,
it's good conversations.
Yeah, Gier, thank you so much for your time.
Appreciate it.
I want to do a quick wrap up.
Okay.
What's one thing investors should do now, and one thing they should avoid, and one signal that they should look out for that would make them potentially increase their exposure to quantum?
Oh, wow. Okay. One thing they should do now, well, if they're excited about quantum, I think they should buy a little bit to have it on their in their portfolio so that they can monitor it. Mm-hmm. There's nothing like that sharpens the senses than seeing that you have it on and then increase it over time. Mm-hmm. I don't put all the money in today, put a little bit every month, and be there for the breakthroughs, right? And what not to do is the first sell-off you get, that you sell all of it. Because I think that you need to sort of prepare yourself for that. You could have 40% down periods, 50%. I think the worst in April this year, some of these stocks were down like 60%. And that feels scary, right? But then they also move, it works both ways. They also move really quick back up. So you are going to miss when they rally back. So believing that, so the do is buy now, hold, and see the breakthroughs come through, but realize that it's going to be a volatile ride, and try not to sell out during those, but use that as an opportunity to add to your position.
Right. And maybe if I can just piggyback on this advice is like maybe the way to solve for weathering the storm is just the allocation size to quantum, right? You could just like invest less. You're not saying
just tone it down.
Yeah, tone it down.
Absolutely. No, I agree. Like don't put in more money than, like, if you see it go down a lot, you're sort of like, you're fine with it. It's okay. And then what was the other question you had?
So the last is one signal that would make you...
The signal.
Yeah.
Wow. I think, I mean, I'd love to say it's the OpenAI comes out with ChatGPT and there's a quantum computing version of that moment. I think I would watch out for one of the quantum companies coming out and saying that they've designed a fault tolerant or they're getting very close to fault tolerant computing. The other one is where you have another announcement around quantum advantage, and that's the application, right? Hey, our quantum computing can solve something useful, and we now have a client that wants to buy it. I mean, I think. So let me just wrap that up again, maybe, and say, I think the minute you see, one, an announcement, and two, a company that says, yeah, we love this announcement, we're going to go and buy it because we can use this for our business to make more money or save more money. That's like the excitement that will you want to be in the market when that happens. You don't want to be waiting for that to happen. That's my view.
Got it. Understood. Well, Gier, thank you so much again. I think
Pleasure. Thanks for
that's a wrap.
Okay.
That's a wrap.